Hey everybody, it's Larry Berman here. Big Fed week coming up to holiday season. Markets are getting a little bit of liquid, not quite there yet. Should be some volatility into the end of the year. Let's take a dive into the chart room. Okay, starting off with a big laugh for the week, we got the employment numbers in Canada, and there's a snowball's chance in July that the net change in Canadian employment last month was an increase of 53,600 jobs, of which 63,000 were part-time jobs. So what is all that? I didn't get a chance to read all the street commentary on it, but what it did do was it dramatically moved the Canadian dollar. So as we can see here in the chart, you've got what was a support area for the Canadian dollar in terms of bearish. Remember, line going up is weaker Canadian dollar. So we came down and we tested and are holding the 50% retracement. What we did at our shop here is we've got a bunch of hedges that we've put on up in these ranges. And so we've written some options to uncover those hedges should we get down to this range over here. But we use what's called a knockout option. So what does that mean? That means that if it goes back to this range, we get knocked out of our liability on the put, take the income. So I really like that structure here because I think there's going to be just a lot of volatility around markets. One of the new narratives in the marketplace now is that the U.S. administration with Scott Bessent and Hassett possibly running the Fed next year are going to coordinate, and they're just going to engineer the most perfect, wonderful Goldilocks economy out there, and we're going to get moderate growth, moderate inflation. Everything's going to be wonderful. That's what asset markets are trying to tell us. The long end of the Treasury curve, not so much. But as we look into the Fed meeting this week, and we look at the forecast for 95% chance that we get a rate cut. I can't imagine a scenario where they don't cut rates this week. But again, as we look through all of 26 and all of 27, we're basically seeing a limit to Fed rate cuts before we start pricing in some hikes. So, we're not going back to zero interest rates. It's unlikely that we're going to see the Fed funds rate get to 3% unless we get a hard economic landing. And the U.S. administration is going to do everything they can in 2026 to prevent that going into the midterm elections. It'll be an interesting year, lots of volatility. After 3 years of mid to high double-digit returns into the 20s, what happens historically when you go back and look at the charts? The answer is negative year for the U.S. equity markets next year. When we look at TLT, long end of the curve again here, we've got auctions this week in the 10-year, the 30-year, and the following week, the 20-year. So we've got a lot of long end supply to digest. If we come through that okay this week, then I would make the strong case we're going to rally into the end of the year in equities. If the bond market breaks 88 here and we end up the week at an 86 handle on TLT, then I think equities are going to come under pressure. Which one is it going to be? Well, of course, if I knew that, I'd have all the money in the world. The message from the commodity market. Remember, I've been telling you guys, be very, very cautious. Don't trust the breakout in commodities. It is not broad-based. It is really precious metals, silver, and gold, lead. In this ETF, that represents about 25% of the index. We saw a very interesting pattern emerge here on Friday where we had a gap up and a reversal down. It looks exhaustive to me for our shop and our commodity index. We've trimmed our weight. I think we're down to 10% commodity exposure right now from what would be, 100% when we were down here earlier in the year. And so, I think the spike could be a very, very influential week in terms of what's going to happen in markets. When we look at the S&P 500, again, we're dancing up against the resistance from October. Right now, again, it's 337 on Friday, so the market hasn't closed yet. It's looking like top and we're selling into it. But, we'll see how that ends up. Definitely positive if the auction supply on the bond side goes through okay. Equity markets are right. I'd be willing to bet, and I expect, that we see these lows tested in the 6,500 level before we break out to new highs. So that's my call for the week. Perhaps I'll change my mind on Monday. Stay tuned at 3 o'clock. Have a good week, everyone.